We had some pretty good news on the economy first thing this morning. In the fourth quarter of last year, the holiday quarter, the economy grew at an annualized rate of 2.9%. And that's pretty strong. Ed Lazear is with us now, senior fellow at Hoover. Now, that's a pretty strong performance for the fourth quarter of last year, better than expected. Would you go so far as to say we may be on the cusp of a boom for the economy?
Oh, well, I wish we were. I don't think you can say that using past GDP. That was a very good number. And if you look at the year as a whole, of course, the year wasn't so great because we had a pretty bad first quarter. But if you look at the last three quarters and think of those as the Trump quarters, we are above 3%. The problem is that, unfortunately, past GDP is not a very good predictor of future GDP. The best predictor of future GDP growth is actually the market. So if you look at the change in the S&P 500 either over the last 3 months or the last 6 months, that gives you an indicator of what people are actually thinking is going on in the economy. And if you use those numbers, that's really forecasting only about a 2.5 to slightly greater than 2.5% growth rate for the next 4 quarters. The reason, obviously, is that we've had a weak market in the past few months, and that's reflecting expectations. So,
the other side of the coin, though, is you're still getting the effects of the tax cut rolling through the economy.
Right.
That's putting money into the economy. You've still got some of these bonuses coming along. We had the McCormick, the Spice people joining in today. And you've got, what else have we? Oh, you've got lots of government spending. I mean, I would have thought that really juiced the economy this calendar year, but apparently not.
Well, I agree with the first two. I'm not so keen on the government spending. But I think the point that you made is right. Look, the tax cuts were important. That was a major first step to getting the economy going again. You know, they're not magic. They're not going to boost us to 5% growth, but they certainly were a step in the right direction, and I think they do increase growth. The other thing is that we've reduced the rate of increase in regulation, and I think that's been a major step forward that the Trump administration has actually put into place. It's not so much deregulation. There is some of that. But it's really the constraint on growth in regulation that's been important. Okay. The other thing I would say, though, and again, this gets to the future. You just mentioned it, actually, when you were talking to the last guest, is that we really need to get spending under control. In the long run, the biggest threat to the economy in terms of its growth is the fact that we are spending too much. We're growing our spending at too rapid a rate, and that always puts a drag on the economy, at least in the long run. So I think we need to get that back under control.
Yes, sir. Ed Lazear, Hoover, thanks for joining us, sir. Always obliged. Thank you. Got it.
Thank you.